Hello hustlers, welcome to the market analysis of FINNIFTY for Monday 9th October, and let's see how you can make money in this market. So starting with the weekly time frame, again we can see here is consolidation once again this week, just like last week. Here we can see market is at bottom, or you can say is at a supply zone, right? Which means that buyers are expected to enter in this area. And what we can also see here is there are buyers entering in this market, and tells us that is this buying on dips, which leads to gap up opening, right? This gap up opening and this rally, and market holds higher levels. Another gap up opening will tell us more about the buying market. Momentum or trend would be expected above this level. So you can see this green arrow here. Above this is where we can get a clear trending market. I won't suggest you taking a trade at this trend line breakout. This is just for identifying the trend, understanding the important zones, understanding uh, supply and demand zones, right? This is just to understand the sentiment and not to trade, okay? Where you can only trade is above 19,925, 19,930. This is where you can enter. This is a good point. And what does this SOR or SOR means is sell on rise. Now why am I expecting sell on rise market is because if someone has to be trapped in this market, then it's only the buyers and not the sellers. Sellers might get trapped if we see a small sell off here, which would suggest that market is going down, and then it pulls back and breaks out. So so identifying sell-offs is according to me is hard. Now of course if we get M pattern or head and shoulders, it would be easy, but to identify just sell-offs like this straight sell-offs is according for me is not so easy, and I don't go behind finding that. I keep my things easy and practical, more realistic, right? Because I'm a real trader. I'm not here to make money by selling courses or doing anything. Okay. So for me, of course, to go bullish is this level, and to sell off is either pattern creation, or best point I would plan would be either a trend line breakout. I can plan a trend line breakout for selling market, because that would work. That's where buyers would get confused, right? That's when buyers will panic, and that's what we want. For a sell-off, we want them to panic. Again, this is somewhere I won't suggest you to trade at. This could be a volatile zone, really volatile. You don't want to get your stop losses hit, right? Another level here would be this level. This is a good level, which is 19,666 is a good level. You can plan a bearish trade below this. all you need is a 5-minute candle to close below this, and you can plan trade. You can also trade on 1-minute chart, but you should be very sure about where you're keeping your SL, right? Because if you get a breakdown at the first swing, right, if you want to enter at the first swing, 1 minute would most likely trap you, right? If you're entering at a second swing at a double bottom, then you can rely on 1 minute, but for the first swing breakdown, you should just consider 5-minute chart closing, right? Then your first target would be this, which could followed by this, right? I'll just mark this level. This will be your second target. This is the first target, this is the second target, and somewhere around this could be your third one. Let's keep it here, 19,595. All right, these are the targets, and again you can exit if you even get till here. Just don't hold till here, just don't do that, or don't enter below this, right? If you miss this, just let it go, or just stay alert and catch it around here. All right, other than that, if one wants to enter at this breakout, as I've told earlier, if you get a flat opening or small gap up and you get this breakout, do not enter at the first swing or the first breakout. Let the market break out, let it come back, take a support or break this level, then again go back, break this out, and then you can enter. So do not enter at the first breakout, at the first swing. Wait for a pullback, wait for the buyers to get trapped, and then you can enter, right? That's the best point to enter, the most trustful, right? So that's what you can do, and the safe. And if you want to go really safe, then wait for this breakout. Then you can have these targets around this consolidation zone. You can see there you can have your targets. We mark this, let me mark a level from this for you. So this would be a target. So that's just below 20,000 level. Around there you can keep your targets. Let's say at 19,970, that's a good target. Now yes, you can of course trade FINNIFTY for Monday, as the expiry is on Tuesday, whereas the Nifty 50 expiry is on Thursday. So yes, you can of course trade both. It's completely fine. I personally don't trade Bank Nifty, so I don't analyze that. FINNIFTY and Nifty 50 are two indices I trade in, and these are the levels which you can follow. These levels I have made here, you can use this for scalping. This you can use it as both as support or resistance wherever the market is, and all this level work legitly. On the downside, you have this levels. In this consolidation, you have these levels you can follow if you're scalping, and even if you're a scalper or whatever, you can wait for this breakout and just get in, or you can also enter at this breakout, but just wait for some good price action, a W pattern, pole and flag, anything, and then take a trade. Just don't go straight in at a straight breakout, right? For a sell off, again wait for head and shoulder M pattern, and yeah, that would be a lot better than just trading at predictions, right? Patterns do work, they work just exceptionally. For example, here you can see this is also M pattern. Well, of course, now this is a very big candle here. This again, this is another M pattern. This is how you identify this. You won't get a clear M always, but you get M patterns like this. You enter at this breakout, you get this swing, this entire swing. This is how you catch trending markets. Now again, this is another kind of M pattern, but if you don't identify this, not a problem, but make sure you don't miss out on these M patterns, right? It's worth taking the risk at patterns because they work a lot of times, and if one knows the market sentiment, it's very easy for that person to trade at patterns, right? Again, once again, here you can see the same pattern, so just to copy this and wait for something like this to happen. Again, here also you can see a kind of an M pattern. If we zoom in, yes, you can see kind of M pattern. Right now, this breakout we got at very late, at 3 p.m. So of course this is not somewhere you trade, but on a longer perspective, we are in a sell on rise market. So considering that, you can definitely trade on M patterns, head and shoulders pattern. And to go bullish, you can wait for this level or again this trend line breakout and good healthy price action. And that's how simple it is, right? For bearish is this breakdown, and for bullish is that. That's it. That's all you have to know of to become a profitable trader. If you follow this strictly without any confusion or without anyone else contribution, just purely loyally follow this and you will become a profitable trader, trust me. And of course we will be back with the post market analysis, where we will see how our levels work. All right, and that's it for FinNifty. Wish you successful trading.